Hi everybody, Russell here from VectorVest. Let's get into the weekly video. So I'm going to click on viewers here, and from here I'm now going to go in and select the given stocks that we spoke about. So just to make sure that all your columns look good at all times, you can always right click and auto fit all columns and it'll make it look all nice and neat. Okay, so the thing I'm going to do here is I'm going to go and put those stocks we noted. So a bit of a shootout between the big blue chips there. Of course, I could have included quite a few others. Some of the mining stocks would have been interesting in there as well, but this is for demonstration purposes, and in later weekly essays we can always put in some of the other big blue chips as well. Okay, so I've put in CSL, see what I did there, CSL.AX, comma, and then I put in the next one, CBA, Wilwiz, whatever it might be, okay, and then it populates it for you. It sorts them by VST. Now, at the moment, I'm sorting mine by market capitalization. That was just a bit of tinkering I was doing just to see just how big those companies were, their market capitalization. But the standard default layout will be VST. So typically when you come to do this, it'll be sorted by VST. So here they all are. Now, what I want to do here is I want to go and have a look at each one. Okay, so if I look at the VC scores, you see over here Telstra right up there at 105, then Commonwealth Bank 104, 104, Wilwiz, CSL at 0.98. But having said that, let's go and graph all these stocks. Key things I'm looking for here, I'll change my graph layout to being a VectorVest layout. Right, so you've got your technicals. So if you scroll through these here, you can see Telstra's technicals are quite good. CBA has been good too, above 1 holding. All right, Wilwiz, yep, pretty good. Just had a little bit of a breather in recent days here. And CSL, nice little technical breakout there as well. But let's go to VectorVest Simple now. And this is a key one I want to concentrate on. I want to concentrate on the earnings profile, EPS. I'll pull this back 5 years. Okay, and I'll just turn off all these other indicators over here. All right, so an important, very, very important aspect here for me when looking at stocks, got to make sure the earnings are doing what I want them to do. Now, CSL's had a very good run on its earnings for many years, but look at this. This is 12-month leading forecast earnings have come off somewhat. Now, in that essay, I note if you scroll in over the last 3 months, zoom in, see how I've pushed the 3-month button, you can see, yes, this is doing what I want it to do. But if I zoom it out a bit further, you'll see that the earnings have been under quite some pressure for quite some time. So we're just starting to see that turnaround in the earnings starting to take place, which is encouraging. But this has been of concern, this area here, where the earnings have been sliding away along with the share price. Okay, let's go back to 5 years. All right, I'll go right up to the top here. So let's do the one up here, Telstra. Right, this is a standout problem for Telstra for quite some time. Its earnings have been falling year in and year out for quite some time. That really concerns me, and it looks like it's not going to change anytime soon. I'm not seeing any signs of life just yet with Telstra. All right, let's keep going here. CBA. Now again, we've spoken about this many a time on weekly essays, along with Telstra, of course, all these stocks for that matter of fact. And CBA has been suffering from a falling earnings perspective for quite some time. The share price kind of defied gravity for quite some time, where the earnings were falling quite heavily, but the share price was going against the trend. And again, I'm kind of seeing that the earnings continue to fall, yet the share price continued to rocket up. But having said that, just like we saw with CSL, just starting to see that bit of a turnaround there, which is encouraging. But over a 5-year time period, it hasn't been particularly that great. Now, a lot of investors will treat CBA as a proxy bond. In other words, they'll buy CBA for its yield rather than a bond, rather than getting the coupon payments from a bond. Let me do this. Let's go and add a parameter and put in dividends. So I'll put in dividends paid in dollars and cents, and I'll put that on, and I'll change the style. Let's just change it so it jumps out a bit more. There we are. I'll make it a different color. You see, there's only so long that a company with falling set of earnings can keep paying out a really juicy dividend. In this particular case, if I come in here and click on the yield, you can see the yield's been really good for quite some time prior to that, right? So it was, if I go back in time over here, you can see the yield was sitting, 5 to 6 odd percent. Plus you've got your franking credits, so it was a very good yielding stock for quite some time. But you see what's happened in recent times, the dividends have been cut. why have those dividends been cut? Well, because the earnings have been falling. There's only so much a company can take on, I guess, from a falling earnings perspective before something's got to give. And in this particular case, the dividends had to sort of be chopped as such, company under financial pressure. It'll be interesting to see as the earnings start to pick up. Keep your eye on those dividends. Most likely they're going to start to pick up. All right, so a bit of a mixed bag with CBA, but encouraging that this is now finally starting to take place. It's been quite a while since we've seen a rising set of earnings, so that bodes well for future price increases, the share price, rising earnings, rising share price. All right, next one here, Woolworths. Wow, now from a 5-year perspective, let's go back over 5 years. All right, a little bit lumpy over here, but look at this, from this point in time thereafter, that is a very good set of rising earnings, is not? So yes, this jumps out at me. This is the standout performer from an earnings perspective, and look at the share price. It's gone from 25, where the earnings started to pick up, all the way now to just on $40 a share. So that one there really jumps out. CSL, as we've covered before. Okay, so that's where the earnings came off, share price starting to come off. Now, noted in the weekly essay, this is something that's very interesting. Notice this. If I scroll across over here and I go to GRT, earnings growth rate, look at this. Woolworths is the only one where the earnings growth rate is positive. The rest are negative. Now, let's just double check the definition. So right click, remember if you get stuck, you can then come in here and click on View Full Stock Analysis Report. And then from here, you can then scroll down to where you go and find a GRT. All right, so GRT reflects a company's 1 to 3 year forecasted earnings growth rate in percent per year. So straight away, that tells me that the earnings on Woolworths is good relative to Telstra. Telstra's under pressure, CommBank's under pressure, CSL's under pressure. Now, what I'm going to do here is I'm going to dig just a little bit deeper. Right, so let's graph all these stocks here. And let's do this. This will be a very interesting exercise. So I'm going to put on some additional parameters. We've seen the earnings, so we'll take it off for now. Add parameter. And I'll go to sales and market capitalization and click on sales. This is in millions of dollars, so the yearly sales. And let's make that jump out as an area graph, go back over 5 years. Let's go look at the sales. So you can see Telstra's sales have been under pressure, have been falling. All right, look at CBA, falling. And look at that, continues to fall. Woolworths, sales going up. Remember that essay we wrote a couple of months back when coronavirus first started to rear its unfortunate head in the marketplace there and around the world, and terrible what it's done around the world. But Woolworths benefited to some extent from the coronavirus because we all stockpiled food. We rushed off to buy cans of baked beans and water and whatever have you, because we were concerned that the shops would run out of food. So a lot of the retailers benefited significantly. A lot of people went out and stockpiled things, or bought things, because they were going to be living at home a lot longer now rather than going to and from the office. Right? So Woolworths is a success story due to the coronavirus and, of course, all the other activity that it does out there. CSL, well, that's good. I like the fact that sales are going up. And why then are the earnings coming off? We'll drill into that shortly. Okay, so let's go back up to the top. There we are. Next thing I want to do, add parameter and VectorVest fields, and then I'm going to go and put on net profit margin NPM. So this is what the company makes. So for every $1 of sales it makes 7.63 cents. So in this case it's Telstra. Now, I'm not too concerned about net profit margin. Yes, of course, the higher the better. There's some very lucrative companies out there that are very high double-digit figures type thing. But if you've got millions and millions of dollars worth of sales, a 7% margin can be very lucrative. Now, in this particular case, sales are falling and net profit margins falling, so it's no surprises to see that your earnings are under pressure. Look at that. All right, so your earnings are falling. All right, let's have a look at the next one here. CBA, look at this. Sales are falling, but net profit margin started to pick up. So although CBA is doing less sales, the sales are more profitable. And we're just starting to see that in the earnings there, where the earnings are just starting to tick to the upside. So interesting time period that CBA is going through there. Sales are down in terms of the amount of financial product and services that they're getting revenue from, but the margin is up. All right, let's keep going. Woolworths. Well, Woolworths has got the best of all worlds, has it not? So you can see here, net profit margin, if I go back over 5 years, you'll see it's pretty much held steady. You might go, oh, hang on, 2.76%. 2.76 cents for every $1 of sales profit, net profit margin. But look at the sales. Woolworths is a low margin, high volume business, right? So they make millions and millions of dollars of sales. So that's 65,000 million. All right. So it's a big figure. So when you're getting 2.76% on that, that's a lot of money. And you can see there. So net profit margin holding steady, sales growing. No surprises there. Earnings are doing well. Okay. CSL, right? So I couldn't understand, why are sales going up? Clearly doing the right thing, CSL, lots and lots of sales, but the net profit margin, it's not as lucrative as what it once was with some of the products and services on offer there, or at least we're seeing this in the numbers here. So that's why you're seeing that EPS sort of dropping off a bit. We need to see the net profit margin pick up. All right, and then you'll see the earnings most likely starting to tick up too. We definitely don't want to see sales dropping off and then net profit margins continuing to drop off. Okay, and then the last thing I'll do here is we'll put in our GRT, so capital appreciation, GRT earnings growth rate, and let's come back up to the top here. Here we go. I'll turn this all off for now. But you can see here, right? So Telstra, the GRT has been below zero for quite some time. Negative earnings growth rate there. That's not good to see. You can see CBA has been under a fair bit of pressure too. Right? I think they've certainly stopped the velocity of which it's been dropping, sort of leveled out a bit. That's why we're starting to see earnings just starting to turn that corner. But still, it's not as good as Woolworths, where you can see, look, Woolworths here, the earnings growth rate is ticking up and our net profit margins holding steady. Okay, and the last one here, CSL. Okay, so you can see earnings growth rate there. They're under a little bit of pressure on that, on growing their earnings at the moment there. So the GRT's come off. So we want to see a super cycle like we've seen prior here, where GRT was nice and strong. Let's do one last thing. Here's an exercise that's always really fun to do. So let's graph this given stock. Doesn't matter which one. So let's pick on this one here, Telstra. And what I'm going to do here is I'm going to change this to being a performance graph. Here we go. So it's a performance graph. And I'll turn off this. So we're just looking at Telstra. And then let's benchmark it against Woolworths, CSL.AX, and CBA.AX. Enter. And then I'll put them on. Here we go. Okay. Let's go back 5 years. So this is the performance stacked up against each other. So performance graph, it shows the relative performance. So here we go. CSL's been your top performer, followed by Woolworths. All right, so there we go. CSL, Woolworths, and then you've got CBA, and you've got Telstra, the laggard. All right, so that's why, in the rankings there for those 4 blue chip stocks, I've put Telstra at the bottom of the list for numerous reasons, but just for performance alone, you can see it doesn't stack up either. CBA has not done as well as Woolworths or CSL, has it? Right, so you can see here CBA, although it's been steadily chugging along, it's not in the same league in terms of performance. CSL was definitely a standout performer up until around about the end of 2020. It's really sort of come off somewhat. And I'd have to give it to Woolworths in first place because I like the fact that it's just steady. It's a steady performer. It's benefited from, us rushing out to the shopping centres during the coronavirus and stockpiling food. But prior to that, the earnings had remained pretty rock solid prior to that too, the last couple of years prior. Okay, so sales are pretty good. The net profit margin, although it's a low figure, it's been consistent. And those earnings are good. And the GRT, earnings growth rate score, is good as well. It's been holding steady. So there you go. There are 4 of our blue chip stocks benchmarked. In later weeks, I'll go on to benchmark some further stocks, and then we'll have a grand finale where maybe we'll benchmark about 20 or 30 of our blue chip stocks in a final exercise. Stay tuned. Hope you enjoyed this week's video. Bye for now.